The moves today coming after Fed Chair Jerome Powell and Treasury Secretary Steven Mnuchin wrapped up their testimony earlier this afternoon. Both Mnuchin and Powell defending government action and the economic response we've seen so far to the coronavirus crisis. So for more on this, I want to bring in Michael Cox, former chief economist for the Federal Reserve Bank of Dallas. And Michael, I know that you spent over 25 years at the Fed. So I just want to bring up some headlines that stuck out to me this morning and then earlier this afternoon. The first two, that all Fed lending programs will be up and running by the end of May. We also had Secretary Steven Mnuchin saying that he expects the economy to start improving in the second half of the year. What do you think of these comments from Powell and from Mnuchin today?
Well, I read the comments earlier and then I listened to it. And honestly, if I put myself in the position of an ordinary American sitting there listening to it, it would be hard for me not to come away with a feeling of shock and foreboding doom about the U.S. economy. We're in a big mess, but both the Fed and the Treasury are doing what they can with some new and creative ways to shore up the economy and keep the credit markets humming. And that's exactly what it takes to make sure that this is a short-term recession and to lessen its severity. Honestly, I was never a huge supporter of the Fed in the past, even when I worked there, because I felt like they were always a little late, behind the game. And a lot of other things. They didn't seem to even understand the economy that well that we were in, the boom that we're in. But today I see more genius, and I see more deep understanding of the nuances of credit markets than I could have ever imagined myself. I've been really impressed. And Fed actions are not just supporting the liquidity needs of banks and the primary dealer credit facility, and the mortgage markets that they did in the past, and the government securities markets. They're now meeting the needs of corporate debt, commercial paper, small business lending, every part of even consumer loans. The Fed is looking to see where the markets are in danger of seizing up and doing what they can to support it. I just want to make one more analogy before I leave to help people understand what's going on. If you and everybody in your city had to sell your house, 20% of the people in your house, in your community, had to sell their house by tomorrow. Imagine what would happen to the price of your house. We know the value of your house is sustainable in the long run, roughly what it is now. But if that were to happen, the price would fall precipitously and markets would crash and seize up. And what you would hope would happen in that case is that some creditors would come in there and buy it at a fair market value. And then later, you'd get a fair price for it. And later on, then those people would sell it back to the market. That's exactly what the Fed is doing. It's what the Fed was initially intended to do back when it was formed in 1913. And so I have gone to being a big cheerleader of Fed policy.
Yeah, Michael, I mean, it's not too often that we have you on the show and you're really, I guess, very supportive of the Fed's recent action. So it's interesting to hear your perspective at this point. So you're pretty satisfied with what the Fed has done so far. During this testimony, we've heard Powell say this in the past, that the Fed remains committed. They will use a full range of tools. I quickly want to play a soundbite from Jerome Powell earlier today, talking about what could be needed going forward. Let's take a listen.
This is the biggest response by Congress ever, and the fastest and the biggest from us. And still, this is the biggest shock we've seen in living memory. And the question looms in the air of, is it enough?
I mean, the question, is it enough, Michael? Do you think the Fed will need to introduce additional policy measures down the road?
No, I really don't. I mean, I expect the Fed balance sheet to grow to 12 trillion. I mean, and it's slated to, and they're at 6.6 trillion, I believe, right now. We've got all these things happening both on the fiscal side and on the monetary side. But keep in mind, the real problem here has been a government edict that certain sectors of the economy must shut down. We can't go to the congregation and the assembly economy. Once those are opened back up, you're going to see the economy start to grow again. Some businesses are going to fail, but they'll be recapitalized in the normal process of capitalism. There's out with the old, in with the new. Businesses fail, the investors lose their money, and that the new investors come in. But the economy will be different. There's no doubt that the economy is going to be somewhat different. I doubt that people are going to travel as much. They'll be slow and go back to the restaurants. But, we've had 34 recessions in the United States since 1854, since we started to keep data on this. 34 recessions, each for a different reason. We recovered from every one, but every time what made us recover was today there are 320 million Americans who get up every day wanting to make a better life for themselves and their family. How do they do that? They go to work, they invest, they save, they start new businesses, they hire people, they invent, they innovate, they take business risks. None of that is gone. That's all coming back. And so the strength of the American people is we were in the longest expansion in history, and we're going to get back to it.
Hey, Michael, you talk about the strength of the American people, and I know in your notes that you passed along, you said that you do expect to see a bounce back, and it could be sooner than most of us may think. So if we were to try to put a timeline on this, when do you expect us to start to see a rebound in the economy?
I think we'll see it in the second half. I'm not sure if it'll be the third quarter or the fourth quarter, but I believe you're going to see people, the cities and the state governments are opening things back up. We have paid a huge price for shutting down the economy, and people finally realizing we can't do this. I've talked to doctors. I've talked to the medical sector is even suffering. People aren't showing up at the emergency rooms. The elective cares are down. Everybody, the pain is starting to show up. And here's what one doctor told me. He said, and I agree with it. That's why I'm repeating it. He said, 10 years from now, we'll look back on this time. He'll say, we can't do that again. We can't afford to shut down the economy every time there's a virus or some Americans have to face risk. We have faced risks as Americans throughout our history. If we were to have as many accidents on our roads, in our automobiles, as we had when Americans first decided to become the land of the automobile and forsake the horse and buggy and become the land of the automobile, 1,060,000 people would die every year at this current level of travel. We accepted that risk. And I think what you're going to see going forward is we're going to learn to accept risk once again to some reasonable level. It hasn't been reasonable.
Well, Michael, one thing that we haven't seen that we've been talking about here recently on Yahoo Finance is at the state and the local level, how states are trying to navigate revenue shortfalls, some of the debt that they're in, how they will best be able to address this challenge. We've heard the Democrats, they wanted to address this, or they are addressing this in the HEROES Act. That's obviously getting pushback from Republicans. What, from your perspective, how do we best address this challenge that is facing the states and cities at this point?
Well, the Fed is already addressing. The Fed is loaning to municipalities. The federal government has agreed to, support the unemployment insurance trust funds. So it's already happening without us throwing a lot more money at it. It's already happening surgically through the Fed and the Treasury in a very smart way. They're loaning.
All right, Michael Cox, former chief economist for the Federal Reserve Bank of Dallas. We always appreciate having you on the show, getting your perspective. Thanks so much for joining us.
Thank you.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.